Good afternoon, investors. You are now on KleverStock with me, Madhaveshwari, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates, Malaysian blue chips demonstrated a strong opening on Tuesday, mirroring the positive momentum from Wall Street's overnight recovery in the technology sector. As for the benchmark, FBMK LCI advanced 4.16 points to 1,755.46 at the opening bell, supported by healthy domestic growth prospects and consistent foreign fund participation. According to the Apex research, the local index is expected to remain on a solid footing throughout the session. The research firm noted that investor focus will turn to this week's fourth quarter of 2025 GDP data for further insights into the strength of the economy and the policy outlook. Well, beyond the local shocks, markets are also monitoring critical U.S. macroeconomics indicators, including non-farm payrolls and core inflation figures, which Apex research suggests could offer greater clarity on the Federal Reserve's policy trajectory. The banking sector remained the standout performer, with Malayan banking Berhad Maybank reaching a new historic peak of 12 ringgit 12 cents shortly after trading commenced. Other notable gainers included Kuala Lumpur Kepong, which climbed 20 cents to 19 ringgit 86 cents, and Press Metal, which rose 9 cents to 7 ringgit 69 cents. Institutional demand continues to favor large-cap defensive stocks and companies with clear earnings visibility, particularly within the financial and utility sectors. From a technical perspective, TA Securities indicated that while the immediate trend is positive, further gains might be tempered as investors await high-impact economic reports from the United States and China later this week. The firm maintains an immediate resistance at the 138.2% FP, with the next upside hurdle coming at the 150% FP. Conversely, the psychological support level is firmly established at 1,700, providing a cushion against potential near-term volatility. In the broader market, trading activity was concentrated in several key counters. Aldridge gained 2 cents to reach 1 ringgit 32 cents, while Zetrix AI experienced a minor dip of 1 cent, trading at 79.5 cents. As the week progresses, the combination of domestic earnings reports and international policy signals is expected to remain the primary driver of market sentiment. Moving on to our local currency and foreign exchange. The Malaysian ringgit opened on a firmer note against the US dollar this morning, capitalizing on a broad retreat of the greenback as global investors weigh the implications of reduced demand for US sovereign assets. At 8 a.m., the ringgit advanced to 3.9250 or 3.9340 against the dollar, up from Monday's closing rate of 3.9325 or 3.9375. The local note's appreciation follows a sharp 0.79% decline in the US dollar index, which fell to 96.865 points. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid attributed the dollar's weaknesses to report that Chinese authorities have advised domestic financial institutions to scale back their exposure to US Treasury bonds. This guidance aims to mitigate risk concentration and shield balance sheets from heightened market volatility. Recent data indicates that China's holdings of US Treasuries dropped to $682.6 billion in November 2025, a stark contrast to its peak of US dollar 1.3 trillion in 2011. Dr. Afzal Nizam noted that this has led to a softer US dollar and expects the ringgit to remain firm within the 3 ringgit 92 cent to 3 ringgit 94 cent range for the day. He highlighted that the move of Chinese regulators stem from concerns over risk concentration and heightened market volatility rather than a simple shift in foreign policy. Despite its gains against the greenback, the ringgit faced downward pressure against a basket of other major currencies at the opening. It depreciated against the British pound to 5.3698 or 5.3821 and eased against the euro to 4.6723 or 4.6830. The local note also weakened slightly against the Japanese yen, trading at 2.5138 or 2.5197. Within the regional ASEAN market, the ringgit maintained a mostly positive trajectory. It appreciated against the Indonesian rupiah, which is 233.5 or 234.2, the Philippine peso for 6.71 or 6.73, and the Thai baht at 12.5813 or 12.6207. However, it recorded a slight decline against the Singapore dollar, trading at 3.1001 or 3.1077 compared to yesterday's close. The currency market remains sensitive to external cues, particularly the diplomatic and fiscal shifts between major global economies. As global investors reassess risk exposure amidst US fiscal uncertainty, emerging market currencies like the ringgit are finding pockets of opportunity to stabilize. Now, for some local economic news, Malaysian Pacific Industries Berhad MPI, the semiconductor flagship of the Hong Leong Group, has reported a significant 42% leap in net profit of its second quarter ended December 31, 2025. The group is now positioning itself to capitalize on the explosive demand for artificial intelligence servers to sustain its growth trajectory through 2026. According to its latest Bursa filing, MPI's net profit rose to 57.09 million ringgit in the second quarter, up from 40.03 million ringgit in the same period last year. This bottom line expansion was mirrored by an 18.1% year-on-year revenue increase, which reached 626.6 million ringgit. The group attributed the performance to higher sales volumes and improved gross profit margins across its global operations. Market performance reflects this optimism as MPI emerged as the top gainer on Bursa Malaysia following the announcement pushing the company's market capitalization to 6.6 billion ringgit. Regionally, the group saw broad-based growth with revenue from the United States skyrocketing by 54%, while the Asia and Europe segments grew by 14% and 8% respectively. For the cumulative first half ended December 31, 2025, MPI's net profit surged nearly 57% year-on-year to 110.14 million ringgit, supported by a 20% increase in total revenue to 1.26 billion ringgit. Despite the strong annual momentum, the group noted a slight sequential dip in profit compared to the first quarter, citing lower contributions from Asia and Europe even as US sales continued to climb. Looking toward the remainder of 2026, MPI remains cautious about external factors such as new US tariffs on certain European nations, rising commodity prices, and the volatility of the US dollar. However, management remains confident in the group's strategic direction. MPI also stated in its financial notes that the group's performance will continue to benefit from strong demand for AI servers and the recovery of the automotive segment. Let's Let's continuing with more economic news updates. The Johor Singapore Special Economic Zone JSSEZ is set for its official debut on March 30, 2026, marking a pivotal role shift in the region's economic strategy. Economy Minister Akmal Nasrullah Muhammad Nazir announced that the investment blueprint and master plan will be launched in Johor Bahru to ensure the local community directly experiences the initiative's development impact. Speaking at the Johor Dialogue 2026 held at the Majlis Bandaraya Johor Bahru Tower, the minister emphasized that the zone is designed to move beyond traditional investment attraction. Akmal also said that we know this is not simply about bringing in investment, it is also about raising productivity and delivering high quality outcomes for our people and the economy. The upcoming blueprint will outline critical incentives, opportunities and the operational framework for the zone, which encompasses 9 flagship areas including Iskandar Malaysia and Pengerang. The JSZEZ aims to achieve a gross domestic product of 260 billion ringgit by 2030. This ambitious goal is expected to fundamentally reshape the state's economic landscape, transitioning it toward a more advanced, innovation-driven river economy. A key metric for the project's success is the creation of more than 20,000 high-skilled jobs targeting local talents in high-growth sectors such as advanced manufacturing, digital economy, and green energy. To attract these talent, the government is offering a special 15% income tax rate for eligible knowledge workers in 11 priority sectors. Coinciding with the start of the 13th Malaysian Plan, the ministers stressed that the focus for 2026 must shift decisively from planning to concrete delivery. He called for all ministries, agencies and stakeholders to operate with discipline, speed, commitment and accountability to deliver measurable outcomes. This delivery-focused approach is supported by the establishment of the Invest Malaysia Facilitation Centre, Johor, designed to provide a one-stop interface for investors to navigate regulatory approvals. Johor Menteri Besar Dato' On Hafiz Ghazi and Johor Economic and Investment Advisor Dato' Sri Hasni Muhammad were also in attendance, signalling strong state-federal alignment. The JSSEZ is viewed as a primary engine for national growth, leveraging Johor's land and resources alongside Singapore's capital and global connectivity. By combining these strengths, the zone aims to host 100 high-impact projects within its first decade, cementing its status as Southeast Asia's most ambitious cross-border initiative. We'll now take a short break, but don't go away. We will return shortly with corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate news updates. Hong Leong Investment Bank Research has adjusted its earnings forecast for IHH Healthcare Berhad downward to reflect the continued strength of the Malaysian ringgit. The brokerage trimmed its projecting by 3% for financial year 2025, 4.2% for financial year 2026 and 4.6% for financial year 2027. The research helps clarify that these revisions are purely a result of currency translation effects from the company's sizable operations in Singapore and India, rather than any discipline in operational performance. Despite the stronger ringgit making local services more expensive for foreign patients, IHH's core hospital services remain resilient. Discussions with management at flagship facilities including Pantai Hospital, Kuala Lumpur and Prince Court Medical Centre indicate that medical tourism has seen minimal disruption from the currency appreciation or the 6% sales and services tax. HLIB noted a distinct difference between essential and discretionary healthcare, while elective procedures such as those offered by Alpha IVF Group Berhad may see higher sensitivity to cost increases. IHH's focus on high acuity life-saving treatments like oncology, cardiology and orthopedics remains highly inelastic. Foreign patients requiring specialized cancer or cardiac care are unlikely to defer treatment due to minor currency fluctuations. Despite the earnings trim, HLIB raised its target price for IHH to 10 ringgit up to 9 ringgit 43 cent and maintained its buy recommendation. The research firm identified the anticipated listing of Sunway Healthcare Holdings Berhad as a major valuation benchmark and sentiment booster for the entire healthcare sector. Additionally, the strengthening ringgit is anticipated to attract more foreign institutional investors, providing additional liquidity and support for large-cap healthcare stocks. Looking ahead, IHH's Turkish operations via Acibadem remain a strong contributor, unaffected by the ringgit-related revisions. With Malaysia's Year of Medical Tourism 2026 on the horizon, the group is well placed to capture a larger share of the regional premium healthcare market as international patients continue to seek out Malaysia's globally accredited facilities and clinical expertise. Up next, we have some business updates. Hoksoon Capital Berhad, a vertically integrated poultry player, reported a robust set of first quarter results for the period ended December 31, 2025. Driven by steady egg demand and the full receipt of government subsidies, the group recorded a revenue of 47.73 million ringgit and a net profit of 8.4 million ringgit. The group's earnings per share for the quarter stood at 2.10 cent. These results come just days before the company's official debut on the main market of Bursa Malaysia, scheduled for February 13, 2026. A key highlight of the quarter was the significant expansion in gross profit margins, which rose to 34% from 27% in previous periods. This improvement was primarily attributed to the group successfully claiming its full entitlement of egg subsidies during the quarter. Furthermore, a strengthening Malaysian ringgit against the US dollar helped lower the procurement costs of imported feed raw materials. The group stated in its financial filing, our performance was largely underpinned by strong demand for table eggs from our end customers, with average selling prices remaining stable at approximately 0.36 cent per egg. The group's net profit margin for the quarter was healthy 17.6%. As of December 31, 2025, Hoksoon Capital maintained a solid balance sheet with total assets value at 194.7 million ringgit. The group's cash and cash equivalents stood at 15.22 million ringgit, supported by a net cash inflow from operating activities of 8.7 million ringgit. Looking ahead, the group is preparing for a massive capacity upgrade, utilizing its IPO proceeds, of which 53.5 million ringgit is earmarked for expansion, as Hoksoon plans to establish a new poultry farm in Teluk Intan, Perak. The 21.3 hectare site will feature 25 automated closed house coops, including 20 for mature hens and 5 for pullets. Finally, wrapping it up with, we have major corporate developments and deals across Malaysia. Malayan Banking Berhad and Credit Guarantee Corporation Malaysia Berhad have launched a new 1 billion tranche under the Portfolio Guarantee Scheme to expand financing access for small and medium enterprises. NG Resources Berhad is proposing to dispose of its 51% stake in Bumi Segar Indah Sendirian Berhad to Eng Kuok Siong and DSI Northern Source Sendirian Berhad for 15.1 million ringgit. Lithuanian artist Ernest Zakarevic is suing AirAsia and Capital A Berhad for alleged copyright infringement over the unauthorized use of his artwork, Kids on Bicycle, on the airline's aircraft. SD Gadri Berhad WWF Malaysia have launched a 5-year pilot program in Sabah to promote regenerative palm oil. Aeon Co. M. Berhad has promoted its Deputy Managing Director, Tsugotoshi Seko, to Managing Director effective March 1. Magma Group Berhad has received shareholder approval for the proposed disposal of its entire 20% stake in Heritage Lane, Sendirian Berhad, for close 63 million ringgit. Well, that's a wrap for Midday Roundup with me, Madhaveshwari, on KleverStock. Thank you for choosing us, investors. Stay tuned for our upcoming live stream programs. Thank you.